Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown video. So this morning, we're going to be looking at the AUDUSD. But before we dive into and to break it down this chart, this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, okay? But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and to help put some additional money into your pocket, especially in these times of ever-rising high gas prices and inflation. Okay, so with that being said, let us go ahead and dive into this chart and this currency pair. Now, before we talk about what's happening with the currency, let us to further discuss what is happening with the AUD. Okay. Now, the AUD did have some positive news come out about this in the beginning part of the week with its retail sales. It actually was its retail sales is actually what they forecasted was going to be, and it was higher than it was previously. Then we had the interest rate of the AUD come out around 12:30 a.m. on Tuesday Eastern Time. Okay. So that started to further give the AUD some strength. But now what we're starting to see is that there's an increase in inflation being catalyzed through ever rising gas prices for the entire Australian economy, which is now starting to have a weakening effect on the Australian dollar. Now, even though the Australian dollar still does remain one of our stronger currencies heading into the mid part of this trading week, it is starting to weaken now. So we have to start paying attention to this weakening, okay? Because this weakening could just be something which is causing retracement, or this weakening can be a beginning of what we will still to see on the chart price turnover. Okay. Now with the USD, we did have a lot of news come out about the USD prior to and going into the opening of Tuesday's New York session. We had more positive news and negative news come out about the USD, along with oil news that came out at the latter part at the oil news that came out at the latter part of the New York trading session, which said that there was an increase in oil. It was a surplus in oil, which means there was an increase in supply in circulating oil around the world. This increase of supply in circulating oil around the world leads to a lowering of gas prices. Okay, lowering of gas prices leads to a strengthening U.S. dollar. So we having that good positive news coming out about the U.S. dollar, coupled with the lowering of the gas prices, means that we have a U.S. dollar that is aggressively gaining strength, and we're also dealing with a currency that is starting to become weak. Okay, now that we got all that out the way, I know fundamentals can be a lot sometimes, but trust me, putting in that extra few minutes to do this work makes a difference between pennies on a dollar and tens of thousands. Okay, so now that we got that out the way, let us discuss what is happening on the charts fundamentally. Okay, I mean technically. So we was going up, going up, going up, range. Looked like we were losing our momentum. Then when that interest rate news dropped, we definitely had a shoot up. But then for all you people who are real heavy in technical analysis, you will see we made that evening star pattern, which is a classic bearish candle pattern that signals reversal. Okay. So as we're starting to see that here, we're starting to see a reversal, and we're also starting to see a drop down in price. So how far can price drop? Let us see. We can drop as far as here before we range, pick up some, and continue to go down to probably about here before we range and continue to go down some and get to here. Okay. Now, this is for the long-term outlook on this chart. This general area here is going to be very important. If we come down to this area here very aggressively, right, with very aggressive long red candles with a lot of momentum, then that's going to be a heavy signification of we're looking at not just aggressive retracement, we're looking at price turnover. Okay. But if we have very choppy, deformed, malnourished looking candles coming to this general area here, then we start to see an aggressive pickup towards the long side, then that is a telltale sign that we're going to be continuing to go into our long position and we were just having retracement or aggressive retracement. Okay. But that's more of longer term planning. For the short to intermediate. We will continue to see a drop down on price to either this area here or this area here. Okay, so this is going to be the targeted area of the new drop down in price here or this area here. Okay, now as we approach this area, we must pay attention to how the momentum comes in. The momentum is coming in very heavily and very strong, very long, strong, high momentum, high volume candles, then we can start to stop. We can start to consider this as price turnover, then retracement. But if the candles are coming in very choppily with a low momentum, low velocity, very choppily, very weak and deformed looking, then we're basically going to have price turn over back to the long side and go into the long position at some time. But for as of now, we will be continuing to drop down in price, with this area being the new target area to drop down. Once we drop here, the range is going to come in. Once that range comes in, we evaluate how it uptakes. If it uptakes very pathetically, then we're going to continue towards the downside. If the uptake is very aggressive, then we'll continue towards the long side. Okay. Hope that information was helpful for you guys. Happy trading.